Hey everyone, just doing a sound check. You hearing everything all right? Welcome everyone to the Kindle Report. It is Wednesday night, and don't forget to subscribe and like these videos because we're not growing like we should be, and maybe there'll be free speech everywhere and they'll let my channel grow. For some reason, we've been stuck around 30,000 for over a year. It's kind of interesting. Anyway, I appreciate you all coming, and there's not a lot to talk about, but the markets are just continuing to deteriorate. We saw very little activity in our database. I'll show you in a minute. The technicals are still deteriorating. There's not really anything to get bullish about here. And, I think what we went through today in the live room was kind of interesting. And I'm going to share that with you today because we did a big educational section on our indicators. We were talking about walking through the indicators. I'll show you a page in TradingView that we use today to talk about, and then we'll go back to our usual TradeStation and utilizing that platform, which is the preferred platform from my viewpoint for trading and all of that. Not a paid advertisement, just been using it for over 3 decades. The interesting thing is when we start to look at what's going on in the world, there really it's become somewhat muted. I mean, you don't hear, it's not Ukraine, Ukraine, Ukraine. It's just kind of quiet. Yield curve is not in the storyline anymore. You know, you're trying to look for a storyline. It's getting pretty weak from that standpoint. And, you know, I'm sitting here right now, kind of nothing to talk about really from the standpoint of what's going on. The dollar continued to strengthen, the yen continued to weaken, and I'll go a little bit on this story about the yen that I talked about last night. We continue to have to watch that. The Bank of Japan is got a meeting. I think it's this week. It might be tomorrow. Hopefully it didn't happen today and I missed it. But I think if there was anything big coming out of that meeting, that it would be well known by now. But I guess the big news, Facebook, right? Meta. We got, you know, better earnings, and it was down 3.3 in the regular session, up 7%, and that was enough to boost the S&P up. It was up about 40 handles, and I am continuing to keep the story, and I'll go into this deeper here in a couple minutes when we get into the technical section. But you know, every one of these even numbers, we call it the figure, the whole number, the 42, 43, 44 numbers. We continue to see the market struggle around these numbers, just keep stair-stepping down very methodically. And it looks to me there was a really great trade this morning off the open, and about 20 minutes in the open, they surged the market all the way up to 42.36. And in my opinion, all the pro traders were jumping all over that thing. We dropped almost 50 handles off of that number straight down for about 30 minutes. So there's not a lot of interest in people buying these rallies. And I think that's going to be the story. I will show you some, like I said, in the technical section tonight, something that we talked about in the live room today. We went through in a pretty big detail. Some of you might be watching right now, but we basically came up with a couple scenarios. There's always two scenarios. If it doesn't go up, it'll go down, right? But it's not so cut and dry. And I was anxious to see when we reopen tonight what the PPMs are going to do, and it's not really that impressive. So I'll go through that here in a minute. So let's go ahead and get into the video tonight. I don't think it's going to take a long time to get through here. There's really not a lot to talk about at all right now. Lots of earnings coming out, but nothing impactful as of this moment. So we'll see as we come into Thursday. We got continuing claims and claims coming out. I don't suspect that's going to be anything big, but we might want to watch if we start to see the claims increase. That might be something to watch for. If we get that, then possibly we see continuing claims start to climb up over 1.5 million. Right now, these numbers are basically historic numbers. So we've never seen it this good. And I talked about this the other night, is on the claims and continuing claims, you have to go back into the 80s to find numbers like this. But guess what? In the 80s, the population was 40% less than what it is today. That's a guesstimate. And so the numbers that we're seeing today is even more, I guess, strong than you would think. And that explains why there's 11 million jobs. There's just, even with the participation rate where it's at, it's not going to go much more than where it's at. So we're just going to continue to watch. I think this employment situation maybe start to give us some indication what's going on. So let's go ahead and get in the database, get through tonight's video. And quick mention, just make sure if you haven't signed up for the indicators to get in there. I'm going to show you how to use these things here in just a minute. Let's go ahead and take a look at the Wavetech database. So here we go. We had 503 sell signals, 136 buy signals, still got a negative rotation going on. There's not anything really, even though we had what looked like a big rally, because we were up, over 1% at one stage, almost 1.2, I believe, on the S&P. And even though the Nasdaq finished up well off its lows, it still wasn't able to get positive. Nasdaq was down minus 0.1 and Russell down 0.34, but the database just isn't getting any traction. And I don't expect it's going to get traction. We're going to stay down in the hole. There's a couple numbers to watch for when you folks are going through my videos with me is 22%, 28, and then the next number after that is 42. So 22% just means we're probably stabilizing a bit, but these numbers don't get oversold or overbought to the large degree. Sometimes they'll get a little extended, but they're in conjunction with other things. Right now, we're not in an overextended area. We can stay down well under the 28% level for months. I've seen it happen many times over the years. I've been watching this database every day since 1998, and when we first launched this platform. In fact, the software we're looking at right now, last update was 2002. It's an old legacy platform, but it still is a workhorse from as far as analytics go and being able to manage portfolios and all of those things. So let's move on. Let's go ahead and take a look at the S&P, and we'll go through a couple elements here that I think are important. So here's the E-minis on a daily. We've traded just above S1 so far tonight. Let's take a look at let me bring that over on screen so you can see it. Let's take a look at this. Right now, R1 was 42.08, high 17, low 42.05. I'm sorry, 42 even, 0.5. And I suspect we're likely to see an S1. That's 41.52. Yesterday's low, 41. Let me go over there for just a second here, 41.49. So we could challenge yesterday's low quite easily from this position just by going to S1. Now, the volatility is kicked up pretty substantial. So we're seeing the daily ranges start to expand here, and that looks to me like we're going to be staying somewhat wide for several days. But I want you to look at something. When we were doing the live room today, we were seeing the PPM1 trying to turn up, and PPM2 was also trying to turn up. All of a sudden, just this, even up 25 handles, they're getting more pressure to the downside. So PPM stands for price pressure momentum, and it's measuring the angle of attack of the moving averages. Let me move this over, and this is just showing that we're coming into an acceleration. Now, just like with I'm going to try to do something here I don't do very often, but let me see if I can find this one screen here. Yeah, so I was able to zoom in a little bit so you can see this pattern. But right here where my crosshairs are, what you can do expect is the 10-period moving average is going to come into the market grid in probably the next 2 days. And it's the same thing as I talk about when we're going up. We get that rising 10. We're going to have a declining 10-period moving average coming into the market grid, which is going to suggest that there is going to be a challenge of the lows. Now, I'll go through a couple of things here, and I'm going to draw it in. Let's go over to TradingView here for just a minute. Bear with me, get the right button. So this is TradingView, and I've got a couple indicators on here. I've got our cycle finder as well as the price projection tool And we've got some new lows being projected right now. And those lows are right now telling us that the downward projection is for 4109, and then there's 4184, and then 4038. And one of the things that we talked about today that could be a possibility, and it was only because at the time, intraday today, that the PPMs are trying to turn up. And you can see now they're all negative. They're all rolling back down. PPM 1 is now at a minus 0.55, PPM 2 minus 0.45. You can see those numbers over here in the red on the far right. Let me zoom back out so we can see this. And then PPM 3 is at a minus 0.10. That's the red number block off to the far right here. And what we're seeing then is that we're starting to see this acceleration. I also have the Wavetech webs on here, and they are also still in this downward formation, which tells us that we're likely to see at least moving down toward these targets over here, which are going to be at least down to potential 4107, which is going to be a retest of the lows. Like I said, yesterday's low 4149, and below that the next number is down to 4041. So it starts to get ugly there, but something else comes into play. We have a 10-month moving average. I'll cover this more in tomorrow night's video once we see how we trade today. But this I'm going to set this pattern up just a little bit here and draw in what we talked about today. And I always tell folks, if I were in Vegas, I would be banned for counting cards. But let's just take a look at the bars here. We have a pivot. This is our indicator. There's three indicators that are used: the cycle finder, the pattern finder, which is also these blue lines are showing you where all the patterns are right now. And then the last thing is the market grid. All of these are using some of the same logic here, but I'm going to count these. Right where this triangle is, this is bar 2, bar 3, bar. So we had, counting that bar, 1, 2, 3, 4, and we're at the 5th wave. Typically what we'll get is two things are going to happen here. We're going to get an extended and do 8 waves down, possibility of 9. So we get waves down here, probably coming into this fib number. Let me erase this and show you the other element is if this is 5, we might get 3 up. So this would be bear with me, my tool's messing up. So we get, let me invert this whole thing here, try this again. So yeah, so this bar would end up, and then we get 3 up. But what's happening is this angle of attack here on the moving averages. And we've got the 40 is coming through here flat, but the 21 is accelerating down. The 10 is accelerating down. That's what these PPMs are tracking. You see the 21 now is just seriously accelerating. And this is typical, probably midpoint of a trend. So there's a pretty good possibility of going down to into the 40 handle here, just based on that. Now, even if we get this 3 days up, chances are I'm going to draw in this pattern. Then we'd get something that looks like this, and we'd get this bar down, and that would be what's being indicated right now by the PPMs and all that. So let's do one last thing here, and if we look at this 5 down, and then we get the other scenario would be we'd come up to the 10, we'd get rejected around these moving averages. We could even extend a little bit, and then you set up a right shoulder here, and then you have a move up that puts you all of a sudden right back into the resistance level. So this is going to be the serious test here. Yesterday's low, 41.49, is going to be important. And then the lows at 41. Actually, it was 40.90 was the intraday low on the futures, on the near futures contract. And that, if that gets taken out, then we're going to start looking at down into deeper into the 40 handle, and the possibility of getting down maybe and testing the 40 handle at some stage. So, but this would be the alternative scenario. But everything I just talked about here is really going to take somewhere between 3 to 5 days. But I believe on Thursday's action and coming into Friday's close, we're probably going to have the answer whether we'll get this 3 up and come up into the 10 or 21 average, or if we're going to get rejected here and close lower and then just go immediately down into an 8-bar extension. So it's going to be what I call a pivot situation. So you take out yesterday's low, 41.49 is going to be the key. We take that out, and then we set up something that would suggest we get at least another three days down roughly, and we would print down into these fib numbers down here that I talked about a minute ago. So it's kind of a pivot thing. So there's not any clear-cut situation from the viewpoint right now. It's a somewhat of a dangerous place to try to play the market on either side. You could be playing off of the lows of yesterday, but yesterday's close was not that bullish. If you look at the cash, it looks better than the futures, because the futures had a little bit more volatility coming into the after the cash went out, and then we all of a sudden, out of nowhere, after the close of the official close of the futures, we saw a big rally, and we printed all the way back up into 42.17. So I'm just going a little more detail on the S&P, because the Nasdaq looks very similar to that, but everything right now, all of these tools are telling us that there's still downside, and I just want to draw one more pattern so you can have that in your reference as well. But this is basically some of the things. This is the other element here that's happening. We got this A, B. This right here is A, and then the B. So this leg down probably extends down to this level, and like I said, if it holds, then we're in good shape for maybe setting up another 1, 2, 3 pattern. But we're trading in threes because this is a corrective wave. We're currently not in an impulse wave. We're not getting impulse type signals yet, but this is something I'll be watching as we go forward. So let's go ahead and let's take a look at the Nasdaq. So Nasdaq is up 148, 1.14%. And even though that's happening, just like what we were looking at here a minute ago on the S&P, PPMs are kind of yawning at this whole situation. So 150 handle move, it's a yawn. And we start to look at the market grid here, R1, 13,129, the high so far, 13,196. So just like with the S&P, we're trading almost up to R2. I would think we get rejected R2, and the potential for S1 is 12,889. That's the minimum on the downside. So R2, S1, depending on how we finish tomorrow, but I think we're going to get rejected up here, and this is probably going to be something to watch for. Just not seen with this type of move, a 1+% move, and not getting any traction on the PPMs is a bit concerning. And all it tells us that we're in a very strong downtrend, and the 10-period moving average right now is at 13,582, and it's dropping about 100 handles per day. So it's going within 2 sessions, it's going to be right pretty much where we're trading right now if we keep this momentum to the downside. So I don't see a lot more upside, maybe an R2 on this market, but that's going to be about it. So the Russell is sick, completely sick. These higher rates are what once upon a time thought it would actually help. It's not helping. It's actually continuing to see a lot of pressure coming in. The Russell's finished negative yesterday, down to minus 0.34 here. You look at the pattern, we actually have a downward target here. 1798 on the downside is a target. 1836 would be the next level to watch for. And same, let's go to RTY just to look at the futures overnight. You're seeing the same acceleration to the downside. So it may have felt good. This rally on the Nasdaq may feel good right now, but yeah, I don't think it's going to last that way. And I'm already short the S&P up around 14. We'll see how I hold those overnight. But that is exactly where you're probably going to see some rejection here. And yesterday's high at 36 is going to be a big number too on the S&P. I know I'm mixing comments, but the Russell is definitely looking lower, and there doesn't seem to be any signs of a turnaround. So as expected, the 10-year did come back up. It bounced almost right off the 21. I talked about this last night, and this pattern is suggesting we're getting upticks on the PPM. So we're back into trend mode on PPM1. PPM2 is still in trend mode, even though it's through its second derivative. We're starting to see some acceleration again. We're still got those overhead targets, those fib targets at 3.13, 3.44, and all the way up at 3.63. I don't have high expectation for those higher levels, but we could get a spike up to 313. And maybe it has to do with the Bank of Japan, or if they come in to support the yen, we'll have to see what happens. But I think it's going to be an outside force. Something's going to happen here that's going to trigger this type of move. For now, I'm still just expecting to stay within the market grid. We look at the grid for Thursday, and what you're going to see is R1 2.83 all the way up to 2.9, basically 2.895 is the top end of the range. So we're probably likely to see this stay firm as we come into today. Let's take a quick look at the yield curve. As I mentioned, we're seeing steepening. We're at 0.93 right now on the 530, and everything is positive here. The 1030 and the 530s are still very positive. You folks be wondering, I don't track the 210s. So the 530s are positive, but this pattern still has some downward potential, meaning it could invert again, and it won't take much to do that. It will be interesting if we did get a spike on the interest rates. If we got a spike on the 10-year up to that 313 level, to see what happens here on the yield curve will tell us a lot about the characteristics of the markets from the standpoint of the configuration within the structure of the banks. And if we see that completely flatten again and maybe even go negative in that kind of surge, that would be a very bad sign. If it steepens, that might be okay, and we'll talk about it when it happens. But for right now, this pattern is potentially just doing a retracement, and it's going to go up. The low to watch for here is for a move below 0.46. And if it goes back below that, it'll probably invert again and probably get worse. We were actually inverted at the lows more than we were in going back to 2006. So that was a pretty substantial number, but we're not getting those type of elements from the standpoint of what the, I guess, expectations in the markets right now. All of a sudden, that yield curve, that's what I was saying in the opening comments, that the yield curve is completely off the pages, back on the back page of the journal, right? They're not even talking about it. It's after you got to go 40 pages deep to find out anything. I don't even, it seemed like everything was Ukraine, 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 and now maybe I'm not in the right loop, but I don't see the news lines, at least from the financial news, actually triggering on that at the moment. So not that it's not out there, it's just that it doesn't seem to be a focus at this time. So let's go ahead and move on. Let's go to crude oil. So crude oil is currently trading 101. This is the daily chart. I mentioned we had that cycle low a few days ago. We're right back into the moving averages. The PPMs are starting to stall again. So there's potentially some downside. There's some Fibonacci projections right now that are down at the 85.50 level. I don't think we get down there. I think this chart here that I'm going to bring up will tell the real story of what's likely to happen. And that is the weekly chart. And we're looking at the 21-week moving average at 90. It is rising at about $2 per week. So that'll be 92 and then 96. So ultimately, I think we just continue to stay in this range. I know it's a broken record, but 96 to 106, we just stay in there. And we did see the energy sector do pretty good yesterday. Energy was up, I think, about almost 1.5% from a sector viewpoint. So that is pretty much what I'm expecting here. As long as we stay up here, I think these energy stocks will stabilize. Probably there's been some pullbacks in some of them, but ultimately they're not going anywhere because this situation is not going to change very much at this time. I've heard some squeaking about the potential for them trying to get the oil production up, but we'll have to wait and see. That'll be pretty tough for them to make that switch from the standpoint of the current administration. Let's take a quick look at the monthly. I know I went through this the other night, but monthly we're trading right at the 200-month moving average, and we are still negative there. So I think that 200-month average right now is at 98.62, and I think that's going to be the magnet. So a little bit above, a little bit below that number, but we're going to stay focused on this. And this should be a multi-month situation, which in my viewpoint is that will still favor the energy stocks. Next market we'll cover is gold. I've got the monthly up here, which we're going to go top down. I mentioned last night we have a monthly low coming in place, and we're looking at some of the numbers that are important to watch are going to be right at this 1878 is the S2 for the month. We printed 1880, so we basically printed S2. R1 is 1989. We actually were above that. We printed just above R1. So far this month we've had a R1 and an S2, and in that order. But we're seeing PPM1 still accelerating here, up 0.53, and that value of that 10-period moving average, 1837, is bouncing not a lot. It's going to be about 1840. So that's probably going to be the bottom as we come into the end of the month. We only have a few more days for this month. So it's going to be interesting to see the update, to see if the PPM2 upticks. PPM3 is actually very positive at 0.70. So the only odd one in the group right now is that PPM2 on a monthly basis. Real quick, let's go weekly. Weekly, we've seen the low of 81. We're looking at STX 1883. We're trading 82, so we're trading below the STX level right now. So we could get an STX buy. I do not like this intermediate chart at all. These PPMs are starting to roll. PPM2 is still in trend mode, but it's very delicate here, and that value is actually at 1880 right here. We need to hold 1880 on an intermediate level to do well. Final market I'll cover is Bitcoin. Bitcoin continues to hold right in these support levels. We got down to a low of 37.7. I talked about 37.110 is S2. So we held right above S2. R1 4266, 41,398 is R2. So far, this is weekly. We've done an S2, we'll call it S2, and an R1. So if we can get above R1 4266, then we could expand that to S2, R2 for the week. PPMs are really starting to look good here. So this being a risk on, risk off asset, it's possible that maybe that 3-day up or moving up toward the 21-period moving average on equities is the right thing. But it's interesting, in spite of a lot of the weakness that we've seen over the last several days, Bitcoin is not taking a hit like you thought it might. So it's really sitting here with the potential to start to move up. We're going to have to get over some of these moving averages. Let's go to the daily here. And daily, we're looking at the high so far today, and this chart rolls over at midnight Eastern time. So 39,979, R2 39,477, the low today 38,316. So we held well above S1, and now we're trading just above R2. R3 is 40,074, and you can see RXT. So this will get a new set of numbers, but PPMs are also starting to improve here. We're still down at PPM1 is down at minus 0.28, so that's trend mode down. That suggests that the resistance is at 40, we'll call it, just rounded off, 4,100. And so another day or so, though, we're going to start to get, I think, potentially move above on the PPMs on the daily. We could see that happen tonight on the update. So if you have the indicators, you'll put Bitcoin on there, you'll see that happen later tonight, or when you look at it tomorrow. You don't have to wait for my broadcast. So let's take one last look here. I know there's not a lot of data, but I want to bring it up since I did monthly. We're sitting right on the 21-month moving average, and it's up at 3.55. I just want to bring that up here real quick. I'd probably be better bringing this up over here. Let's see if we can do that. I'm just trying to find the right symbol. Here we go. So let's put this up here on a monthly. Let me reset this. There's just not a lot of data, but this is somewhat interesting because these Fibonacci's, I've talked about these before. This pattern, I've got the pattern finder on here, and it's showing that we've got marked low, marked high, and after this month, once April finishes, we're likely going to get a marked low and a swing low right here on this low here, which is at 32,950. So that print low that we had a few months ago, that's going to be the swing, and these Fibonacci projections up above are telling us where this thing is likely to go, and this 21-month moving average has a value 3.56. ppm1 is actually at a 0.95, and ppm3 is 3.64. So these are from an angle of attack situation. There's still a secular uptrend here, so it has not been broken. And I know there's a lot of talk. The trolls are coming out whenever Bitcoin comes down. The trolls come out in a big way. Okay. That's going to do it for tonight, folks. I hope you found this interesting. Remember to subscribe and like these videos. And here's the link to the indicators. It's a one-time purchase, so it's not a subscription. So you buy them, you own them, you use them, make some money. You come into our live room for a month just for spending $300. So you can come in there and you get the whole benefit and hang out with me and trade and go through some pretty in-depth detailed stuff. So hopefully I'll see you folks there. And those of you that are already in there, I will see you tomorrow in the live room at 1 o'clock Eastern. And the rest of you, I'll see you tomorrow night. So thanks again for watching, and I will be ready to go. So we'll see you soon. See you tomorrow night. Thanks, folks. Hey Jeff, sorry you made it late. The replay will be ready very quick as soon as I turn this off, so you'll get to watch it. Thank you, everyone. Just a quick comment, Abbey Road. The percentage below an average market, maybe it means it's going to rebound, but the direction of the average has a lot more merit than the extremities that it might get below it. Maybe there's a trade there, but you're not going to pick a bottom that way, I don't think. And I don't think picking bottoms is, you need structure to have a bottom. It's not just a one-day thing. Anyway, good luck. You should join us in the live room. Talk to you soon.